Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. So it's 9 o'clock. I do want to take you all through, just to kick this off, a quick peek at what's going on with the intraday chart of the S&P, as well as why we're looking at this time a little bit differently than we normally would when we get together for Charts and Coffee. So take a quick peek at what we're dealing with here. A little bit of a move into the HPMR right around 830, 835, and we're moving higher off that. And what is the psychology of this time right now? Is jump on over to the calendar, scroll down to Wednesday, and you will see 9 a.m. is when we have a panel discussion in Portugal. Lagarde, Bailey, Powell. This is 30 minutes, obviously, before the bell, and it's going to be kicking off a little bit of a psychology that if these are all the heads of the Federal Reserve, European Central Bank, Bank of England, Federal Reserve, if they sound either equally as hawkish, by the way, all three of those central banks are hawkish, which simply means favoring higher rates. They're in tightening cycles, Bank of England and, of course, the Federal Reserve. And then the ECB, the European Central Bank, is about to do the same. If these three heads, these grand poobahs of the central banks, do not sound any more hawkish than they already have, this could greenlight a little bit more strength as we go into the end of quarter, the end of month, and possibly what I think a lot of traders, including myself, are looking at as far as rebalancing. Cash flows going in. Now, those of you that are members of my Sector Secrets Mastery, I talked in depth about the timeline in terms of the current tightening cycle, all these rate hikes that we're getting, the timeline that we're in, when we're supposed to peak as far as the rate, and when we're supposed to peak in terms of the month. When do all these come to a head, and how clearly projected is that? If it is, the more clearly projected it is, we're going to see it in the Fed Fund futures. And when traders ask me, Rod, could this be the bottom? Or is it time to go shopping on the weekly timeframes? Can I put some positions in my portfolio and have a higher degree of expectation that that zone can hold and maybe set me up for whenever the next push higher is? And it's going to come, gang. We're going to get it, just not necessarily today or this month. But how can I position myself for that in a patient and tactical way? That's where we are, getting very close to. And today, tomorrow are going to be two major events. One, we get to hear from Powell himself, hugely important. Two, we get data. So one of the common questions that I've been getting before I jump into your questions here today is, where are we on that inflation trajectory? Well, we're going to get another data point tomorrow, and that's the PCE, which brings up, okay, Rod, how do I track this? I mean, can we track inflation? Can we understand what's happening with inflation? And what do we track to do this? So we can do a couple things that are really easy, because we never want to start guessing at what inflation is. And I'm looking for my chart right now. There it is. There's two ways we can look at inflation. One is the PCE, which is what we're getting tomorrow. That's the Federal Reserve's favorite way to measure the inflation that we have right now in the economy. And the other is the CPI. There are very big differences between who is asked, what it's measuring, and how the final output is going to basically reflect what's happening. But this is the CPI right here. This is a chart. You can chart all this. It's a chart of the CPI. And you can see it's still going higher. Now, this is to May. That's the most recent data that we have. Of course, all economic data is backwards looking. And this is where I was mentioning to my members in the mastery. I said, look, I got asked a lot about recession. So look, by the time we look at the backwards data, two sequential GDPs heading lower in a row, that's inflation. That's the reason we're supposed to panic, by the way. By the time we have the confirmation of recession, most often, since recessions only last a few months, we're already coming out of that by the time we see the next quarterly price point, meaning this GDP data. So when people ask, Rob, do you care about, from a trader and investor standpoint, is a recession something you prepare for, calculate for, are concerned about? As a trader and an investor, zero, not at all. It's something that economists will talk about. It's something that the chuckleheads on television will talk about, but we really don't care because it's so delayed. By the time we're supposed to be freaking out about it, it's usually on the way to either leveling out or back up, because these things only last a few months, and that's a quarter. So we get our two sequential GDPs backwards looking. So yes, we're in a recession before we even know it. I don't know if we're in a recession right now. I don't care. So let's make sure that we're being really tactical and rate of change driven about our decisions. Rate of change meaning looking from price point or data release data to data point to data point to data point. And so here's your CPI. We're still heading higher. So we peaked? I don't know, but this certainly would be top picking if I were to do that. We can do the same thing with the PCE. Now, if we do that with the PCE, and maybe I'll do that tomorrow, you can see it's a slightly different view, but let's do that tomorrow in Charts and Coffee. In fact, tomorrow at 8:20 a.m. Eastern, I got a lot of requests for this. We are going to do another hot zone session. Hot zones are what I call economic releases, high impact, high volatility, scheduled economic releases. Little Ragheeism there. So we're gonna watch intraday while I use the hourly price movement ranges, how I'm going to tackle this really important data release in the PCE, and then I'll show you the rate of change of the PCE and what does this really mean to whether or not the Federal Reserve is going to change the target rate probability, where our rate's going to go, and whether it pushes it out or brings it in. This is what longer term understanding is all about. And we'll do that tomorrow. So we can do a little bit of day trading. And that day trading understanding is going to set us up for our longer term position, our portfolio. So how cool is that? They don't have to be disparate things, gang. Your understanding intraday can give you a lot of insight into what's happening longer term. And of course, your longer term charts can give you a lot of insight into what's happening intraday. As a lot of you who took my class this past Saturday, and thank you and shout out to those of you that did. You know how important the daily and even the weekly charts are to when I'm making decisions on the 5-minute time frame. All right, gang, let us, as always, jump into your questions. That is what this show is absolutely all about. So let's do this. Battlehawk, how are you? Let's open these charts up a bit. All right, let's get to it. Good morning. I've got my coffee. I love it. Is UUP opening in the wave? So I would like to look at DX, but I know DX is not always realistic to look at because it's on the ICE exchange. ICE exchange is not one that most traders have access to. And since 9 o'clock is, let me show you what it looks like right now. Since 9 o'clock is very much when this hot zone with the European Central Bank and the US Central Bank is happening, the dollar is going to move over the course easily of the next 30 minutes. So the question is the dollar in a place that we can do anything with? Currently, this is a live look at the DX futures contract. And right now, no, it's as you can tell here, left the 3 lines of the wave. So no, right now we are not inside the wave. And it would have to look. So if you're wondering, what does inside the wave look like? Well, let me show you what this looks like. So I can actually darken these lines up. I make them real faint because sometimes traders don't want to see them too brightly, but let's say we just kind of crank these up just a little bit. That's not too much, is it? All right, let's crank these up a little bit. And then you can see where the wave is sitting. So I'm going to make this 100%. And I'll make this 100%. And it'll brighten it up. That's how easy it is to sort of keep these very prominently on your screen or dim them. There they are, the green, blue, and red lines of the wave. And when we enter the green line, which I think is probably still a little difficult to see. Oh, because it's not brightened up all the way. There we go. See how on specifically the 27th and 28th came down and touched and even went below that line? That's what we're looking for. And we're just not near that right now. So thanks for the question. Hey there, Giancarlos. I love that professor. I love that. You know why? I love the X-Men and yeah, Professor Xavier. Love that. So thanks. What do I think about TLT? So we got to start off at ZB. That's the long bond futures contract. And does it move with the market or inverse? And I'm thinking of shorting it. I'm thinking about going short ARC. Okay, so ARC and the long bond. All right, so they're two different conversations. So let's tackle the ZB TLT conversation first. Start with structure. You know, one of the things that hopefully at this point, I hope I sound like a skipping record at this point. Structure dictates strategy. Strategy dictates indicators. Realize that whenever you're losing consistently as a trader, when you look at consistent losing traders, they do that process absolutely backwards. And market structure maybe is part of the conversation. They pick their favorite secret squiggle, maybe one they just bought, maybe one they just found, and they apply that. Then they think about the strategy that relates back to that secret squiggle. Maybe they have some vague understanding of uptrend, downtrend, chop, consolidation. Dollars to donuts, most of the time they do not. Now, what are we going to do? Start with structure. Uptrend, downtrend, consolidation, chop. The market can move up, down, or sideways. There's two flavors of a sideways market. This is a downtrend. All right, so now structure dictates strategy. Strategy is wait for a retracement, wait for the mean reversion, wait for a bounce, a rally, whatever that word is that clicks off in your mind. How do I short the rip? What's the rip? A retracement, a reversion, a rally, right? So now that we're in the zone, like we were on, say, the 23rd or 24th, getting close to it again today, the 29th, once we get up in that zone, I use the wave. Gang, the wave is really simple. 34 EMA on the high, the close, the low. If you're looking for levels of dynamic support and resistance on the chart, I've been using this for, almost 30 years. It works remarkably well. You can set it up on any platform, or you can just download the indicator that I give you all with the color-coded candles, the GRAB candles, over at countdowntrader.com. And you'll see I have them on my weekly time frame, my daily, my 5, because structure dictates strategy, and strategy dictates the secret squiggle, right? That's an indicator. I like it, but I'd like it from a little bit higher. Definitely stick with the short side. Look, what did traders do here? They picked a bottom. Yeah, that worked out really well. And then what are traders going to do again? They're going to pick a bottom. Now, this time around, it's probably a little bit more, I'm just going to look for this market to get back down to this Darvis 2.0 right here. And then I'll see if we can put in a lower low. But the path of least resistance is still down. We're still in the midst of a tightening cycle. But the more we get to the goal, as I mentioned earlier, from a month and percentage standpoint, the more bonds are going to front run the eventual leveling out of the Fed funds rate, the target rate. And then maybe we go into chop, and that chop could then turn into eventually an uptrend, but really too soon for that. Be very careful about picking bottoms, gang. It just doesn't work. And anyone who's picking bottoms, they're going to pick 2 and 3 bottoms. It just sounds bad. And eventually they're going to be right. And then all they'll talk about is, I picked that bottom. Forget the fact that I mentioned this 4 times earlier. That's what happens. And I just described financial television to a T. If I get invited enough and I make enough bold, almost ridiculous calls, and eventually, like a broken clock, I'm right, well, there's my career, and I can talk about being the guy or the gal who picked the top and bottom in the market. Don't be that person. Their job is very different than ours, right? Financial entertainment is very different than you and I risking our hard-earned capital. Very different. So love the question. Love the idea of continuing on with the short. And that would, of course, map to puts on the ZB, TLT, puts on TLT. The next question was ARC. Sure. Okay. It's funny. When I look at ARC, a lot of folks bashing Cathie Wood, which I think is in poor taste and fairly ridiculous. Because look, the ARC is down. She didn't tell people to buy at the highs. She didn't tell people, hey, buy at the highs. She's always talked about a 5-year time horizon. So who am I to bash someone who clearly knows what she's doing, but has a different view of the market than, say, the tiny myopic, patience and time horizon of your typical trader or investor. That being said, they're seeing still massive inflows. What does that mean? People are still buying this ETF and her other ones. They're still buying them. There's inflows of cash still going in. Why? Well, at $42, it's a whole lot better than some chucklehead who bought it at $130. So rule number 1, don't buy brand new highs like that. Second part, know the time horizon. So when I'm talking about ARC, Giancarlos, I'm going to rely on the time horizon of the person who manages this fund. And I've got to give this 5 years. Look, she had an amazing year, right? Which is what got this whole ETF and got her on the map in a way that is unprecedented. I mean, I think people call her Aunt Cathie, right? She's already got a nickname. When you got a nickname like that, you've gone mainstream. People know who Cathie Wood is. Now, all we need is another year like that. And is this the way this particular fund is going to work? Every handful of years is just a crazy rip? Maybe, I don't know. Can you short this in the meanwhile? If your time horizon is not that of an investor and rather that of a trader, yes, right? I mean, it's a double red. It's continuing to head lower. Most of the resistance seems to be found again and again and again and again, mostly within the wave. And so absolutely, can you look to the short side? You can. But I will say April was a shift. Yes, we still go into downtrends, but the way we're flipping from downtrend to chop is a little bit more frequent. All right. So hope that makes sense. All right. Let's grab another question here and moving on. Alexa, stop. She's very nosy. Alexa. All right. Looking at XLU. Sure. XLU is a defensive corner of the market, as is XLP. One of the commonalities that XLP and XLU stocks have is that they are often higher yielding dividend names. That is where a lot of longer term investors will say, hey, at some point, I'm willing to just dig my heels in, grab this sector or grab the stocks within these sector ETFs because they're dividend yielding. And when things seem to be uncertain and heading lower, defensive names tend to rise to the surface. But we are not seeing the kind of sector rotation, the kind of appeal that we would think the XLUs and XLPs of the world, the stocks within them, should be enjoying, considering what's happening with the broader averages. Be careful. Dividends are the icing on the cake. I think a lot of times, whether that be dividend kings, whether that be aristocrats, I love those. When I do my macro market deep dive, we talk about longer term strategies, dividend and aristocrat. Those are longer term strategy conversations. In fact, I even bought URLs with those .coms because at some point it'd be really cool to dive into that concept. But unless we're seeing appeal, unless we're seeing those being where money is going, this is really, interestingly enough, staples, the defensive corners of the market, are behaving just like the broader averages are. There's been no risk aversion that seems to be helping these defensive names. They're moving with everything else. I like XLU conceptually, but when I look at the structure of this market, structure, strategy, secret squiggle, right? I cannot say this is doing any better or worse than anything else. When I look at XLU versus XLK, pretty much the same. Bouncing, correction to the wave, and likely still reaching resistance. But I will continue to look at XLP and XLU a little bit differently because clearly the appeal at some point could be, yes, I'm still concerned about longer term equity trends, and let's go ahead and hide out in XLP and XLU and the stocks within them. And remember, traders may not and investors may not grab XLP and XLU. So this is where it's really important, if you've never done this, to crack open those ETFs and ask yourself, what's inside XLP? And are any of the individual names within them more bullish than the sector? And there are a handful here. I'd keep an eye on Colgate. I'd keep an eye on Coke. I'd keep an eye on Pepsi, right? There are a few places that I would keep an eye on where individual boats might be looking better than the tide. So you don't have to focus on the tide, maybe some of the individual boats in these corners. Let me show you XLU as well, since that was your question there, Eduardo. Yeah, again, what would look a little bit better on XLU? I'd keep an eye on NEE. I'd keep an eye on ED. I'd keep an eye on WEC. Before the broader sector continues higher, some of the boats oftentimes will lead. Lead meaning they're going to go first, and then that will affect the group of stocks that we call the index of the sector. So as always, gang, thank you for being here for Charts and Coffee. We're going to do it again tomorrow. But remember, we also have our PCE Hot Zone session. This will be the third Hot Zone session that I'm doing, where we have a high impact, high volatility event. And we're gonna talk and trade it live, as I did the non-farm payroll in June, as I did, what did I do also? CPI in June, and we're gonna do the PCE here in June as well. And I think we're gonna, continue on with these Hot Zone sessions a few times a month here at the Simple Trading YouTube channel. All right, gang, have a great one. I'm gonna see my folks in the Sector Secrets Mastery in just a moment. Be good to each other. I'll see you tomorrow, same time, same station.